Hello everyone, it's Elliot Gu here with the Free Market Speculator and the Energy Bulletin, and welcome to my Sunday Deep Dive. In this weekly video, we take a look at a key chart, trend, or indicator that caught my eye over the past week, and I explain what it means, or at least what I think it means for financial markets. Now every year, the Energy Institute publishes its statistical review of world energy, usually in late June. This is a report that was previously published for many decades by BP, and that of course is the company we once knew as British Petroleum. Now this report is a treasure trove of long-term data on global energy markets, broken down by country, region, and fuel source. And it's something I look forward to diving into when it comes out each year. Today I want to talk about the energy transition, the concept that renewable energy technologies are quickly replacing, or more accurately displacing, coal, crude oil, and natural gas as the world's key fuels. It's the notion that we'll soon see global demand for these fuels roll over, peak, and decline at an accelerated pace. And the idea that China is successfully beating the US and all other countries around the world when it comes to solar energy specifically. These are all narratives commonly touted by the mainstream media and many governments around the world. The reality, as I'll explain in this video, is that while solar and other renewable technologies are growing, the so-called energy transition away from the big three fossil fuels remains elusive. The transition narrative is foundering as it meets the cold, hard realities of physics and basic economics. Indeed, even China's solar industry, often held up as a blueprint for the rest of the world, has hit an absolute wall this year, revealing a Chernobyl moment for solar that far too many investors may be ignoring. Before I dive into the situation with solar right now, let's start with this. This chart shows what Energy Institute calls total energy supply, TES, which is simply a measure of the world's primary energy supply. This is energy derived from all sources and used for all purposes, whether it's coal used to make steel, solar used to generate electricity, or oil that's refined into jet fuel for use by the airline industry. This chart shows total energy supply from 1965 to 2025 from the Statistical Review, and it's measured in exajoules. Now, just to give you an idea of how much energy a single exajoule is, it's roughly equivalent to 172 million barrels of oil, 920 billion cubic feet of natural gas. It's roughly enough energy to power 26 million American homes for an entire year. An exajoule is also 5 times the amount of energy released by the so-called Tsar Bomba, the largest nuclear weapon ever detonated, in this case by the Soviet Union way back in October of 1961, about 2.5 miles above a remote island in the Arctic Ocean. In short, an exajoule is a lot of energy. As you can see, global energy use grows steadily over time. It's up 4-fold from a little under 150 exajoules back in 1965 to a little over 600 exajoules last year in 2025. Energy use and economic growth go hand in hand. I've labeled the few examples of flat or declining total energy supply, and by extension, total energy demand, since 1965. Now that includes the late 70s, and the early 1980s, the energy crisis and double-dip recession of that era, the Great Recession and global financial crisis of 2007 to 2009, and of course the COVID lockdown recessions and travel restrictions in many parts of the world back in 2020. So where does this 600 plus exajoules of energy come from? The simple answer is more than 86% of the world's energy supply is derived from coal, oil, and natural gas, what I like to call the big three. And despite what you may have heard or read, that's barely changed over the years. Take a look. In the year 2000, coal, oil, and natural gas comprised 89.1% of global energy supply. And in 2025, the exact share was 86.24%. Think about that. Over 25 years, despite all the talk of the rise of renewables, the big three fuels lost less than 3% of market share, 2.86% to be exact. And let's go all the way back to 1965. 60 years ago. In 1965, coal, oil, and natural gas provided 97.37% of the world's total energy. So the big three have lost only 11.13% of their market share over 6 decades. Well, how about solar? Probably the most talked about of the renewable energy technologies these days. It's certainly true that we've seen massive growth in solar in recent years. Indeed, as I'll outline here in just a moment, solar was the fastest growing source of energy globally in 2025, accounting for 28.5% of total growth in energy supply. Yet growth and the level are two very different things. In 2025, solar comprised only 1.69% of total global energy supply, and wind chipped in another 1.63%. Solar in particular is growing rapidly, but that's from a low base. In the past decade, despite all the growth and massive government subsidies I'll talk about here in just a moment, solar has picked up only 1.12% market share of total primary energy supply and demand. Now here's the big picture. Crude oil is still the world's most important fuel, accounting for a little over 1/3 of that 600 plus exajoules of global supply. Coal comes in at number 2, accounting for about 27.7% of the global energy pie, and natural gas is a fast-growing number 3, at a little over 1/4 of the world's energy mix. Now, as I said, the big three comprise some 86.24% of the world's energy system in aggregate, and if we add in nuclear and hydroelectric power, which are the next two most important energy technologies out there, that jumps to a commanding 94.1% share. Look at this chart closely. Does that look like an energy transition to you? Even with the growth we've seen in solar in the past decade, nuclear is more than 3 times as important as a source of energy globally, while oil is 20 times more crucial to the global economy. And despite what you may have heard, there's no peak oil. There's certainly no peak natural gas. There's not even a peak coal. In 2025, per Energy Institute, global oil consumption reached a record high over 103 million barrels per day, up 1.32 million barrels from 2024. Global natural gas consumption also reached a record high over 405 billion cubic feet of gas per day, and that was up about 6.41 BCF a day, or about 1.6% from 2024. And coal consumption surged to over 166 exajoules, a record high, and up about 0.7% from 2024 to 2025. To put that in context, coal demand growth has averaged about half of 1% annualized over the past decade. So 2025 actually marked an acceleration in global coal demand growth relative to that recent trend. That's where we are and where we've come from in terms of global energy consumption over the past 60 years. It's important to keep the scale of global energy demand and the present dominance of the big three in mind before discussing the shorter term trends I'm about to dive into. So let's move over to that growth side of the equation. Over the 10-year period from 2015 to 2025, total global energy supply jumped a little over 76.5 exajoules. And here's where all that energy came from. More than a third, 33.7% to be exact, of the growth in global energy supply over the past decade came from natural gas. Next up, crude oil, which chipped in 21.4%. Solar and coal at 12% and 11.4% respectively. So while the big three, oil, gas, and coal, still enabled roughly 2/3 of global energy demand growth in that 2015 to 2025 period, solar was a meaningful player, and solar and wind together provided close to 23.4% of all those new exajoules of demand. Now, if we look at just the past year, solar's contribution is even more eye-catching. In 2025, total global energy supply grew by 8.13 exajoules. And as I alluded to earlier, solar was by far the single largest source of that growth, contributing 28.5% of the total, followed by natural gas and oil at 24.2% and 23.8% respectively. That's the first time outside recessions where solar has been the fastest growing single source of energy in any given year. In aggregate, coal, oil, and gas, the big three, still accounted for more than 56%, more than half, of the growth in global energy demand in 2025. Yet, we shouldn't minimize solar's impressive contribution, and that rapid growth is certainly attracting plenty of attention. You'll get no argument from me on that. I've even heard some pundits call solar's growth unprecedented. And that's where the consensus narrative falls apart. Let me explain. Now take a look at this chart. This chart shows total energy supply growth for each individual year from 1966 to 2006, and that's the blue column. The orange columns represent the total growth in nuclear energy supply, also measured in exajoules for those same years. Now, two basic features to notice. First, do you see how global energy demand galloped higher through the mid and late 60s and into the early 1970s, and then flatlined in 1974 and 1975? Well, that's a function of the first energy crisis and OPEC oil embargo of that era. In 1972, oil alone accounted for more than one half of the world's total energy supply. It was 50.34% to be exact. And that share was growing at the time. Between 1965 and 1972, oil's share of the global energy pie jumped about 7 percentage points, from 43.33% to that aforementioned 50.34%. That's over just 7 years. So what do you think happened when oil prices surged by 1/3 in 1973 alone, and then more than tripled from there in 1974? Even on an inflation-adjusted basis, global oil prices soared fourfold from 1972 to 1974 as OPEC began flexing its muscles. Well, what happened is that global energy demand dropped. What you'd expect when prices rise that fast. And the global economy entered its worst recession since the 1930s. There's just no way for the US or the global energy system to adjust quickly to a supply shock of that magnitude on a fuel so important to the global economy. And we saw a second shock, visible on my chart, in the late 70s and early 80s. Between 1977 and 1980, average global oil prices jumped again by 166%, and inflation-adjusted oil prices nearly doubled. Enter the double-dip recession of 1980 to 1982. However, take a look at those orange bars as well. Do you see how nuclear power began to contribute meaningfully to global energy demand growth in the mid-1970s? And then from 1983 to 1987, it became one of the world's fastest growing sources of energy. Now that's the area I've boxed on this chart. Consider 1985 alone, right? When global energy demand jumped 7.85 exajoules in that single year, amid something of a renaissance for the global economy in the 1980s. In that single year, nuclear contributed more than 32.6% of global growth in energy demand. Yes, that's even more than solar last year. Last year, solar's growth was impressive, but not unprecedented. Nuclear did the same thing, even more, back in 1985. Indeed, the parallels between solar's growth since 2015 and nuclear's growth starting in 1965 are frankly uncanny. Now look at this chart. In 1965, nuclear accounted for 0.19% of global energy supply. And in 2015, solar stood at 0.18% of global energy supply, almost identical. Look at the blue line here. That's nuclear's share of global total energy supply from 1965 to 1990, a 25-year period, right? As you can see on the horizontal axis below the chart, that's the first of the date pairs that I'm showing you here. Now from 1965 to 1990, nuclear rose from 0.19% to 6.59% of global energy supply. Now solar is the orange line on this chart. And that's showing you the growth in solar starting in 2015. So we only have 10 years of data, 2015 and 2025, for solar to compare to that 25 years of nuclear growth from 1965 to 1990. However, do you see how closely these growth arcs track? As I said, in 1965, nuclear was nothing, a paltry 0.19% of global energy supply. By 1975, however, After that early 1970s energy crisis, that share was already up to 1.74%. Similarly, in 2015, solar was at 0.18%, and last year we were up to 1.69%. Solar's growth isn't unprecedented, it's just following a similar arc of growth to nuclear a half century ago. This isn't just a casual statistical artifact either. You see some of the same forces that propelled nuclear's growth in the 1970s and 1980s, well, they're driving solar's growth today. First up, in the 1970s, the world collectively woke up and realized that it was too dependent on oil. As I said, more than 50% of the global energy system was oil. More specifically, major global economies were dependent on oil imports, specifically from OPEC nations, and that was a major energy security issue. In 1972, the US consumed 16.37 million barrels of oil per day and produced just 11.2 million barrels. Imports accounted for almost 1/3 of total supply. The European countries that would eventually become the EU consumed almost 12 million barrels of oil per day in 1972, and they produced less than 670,000 barrels a day. Nuclear's growth was driven by necessity. When the price of energy suddenly soars, market forces drive investment in substitutes and alternatives. Look at this. In 2025, China imported about 75% of its oil and more than 40% of its natural gas. Is there really any wonder that it has worked to grow solar, wind, and nuclear over the years as a way of enhancing its domestic energy security? Government policy also helped to drive nuclear's spectacular growth in the 1970s and 1980s. Now, on March 6, 1974, the Prime Minister of France, Pierre Mesmer, marched on the national television. This gentleman that I'm putting up on your screen right now. He announced what came to be called the Mesmer Plan. He outlined a plan that later came to be defined by a popular slogan. En France, on n'a pas de pétrole, mais on a des idées. Apologies for my accent. That translates to, in France, we don't have oil, but we do have ideas. Mesmer outlined a plan centered on 3 key energy pillars. First, everything electric, everything nuclear. Mesmer's plan was for France to achieve total energy independence through total electrification. The government sought to replace oil, gas, and coal by converting most economic sectors from home heating to industrial manufacturing to use nuclear-generated power. If you think that sounds similar to all the talk today about electrification of the global economy, well, you're right. Second, standardization. In the US at the time, each nuclear reactor was basically custom engineered, and there were plenty of different designs out there. France bought a single design technology from Westinghouse, handed that design to their state-owned electric utility and their state champion engineering monopoly to mass-produce reactors. The first units took between 7 and 10 years to build, though later, through experience, they managed to knock down construction timetables to just 3 to 4 years per reactor. Third, this was a top-down state push. The government decided where the reactors would be sited, no environmental impact statements or local community consultations. The government then provided low-interest loans to finance and build them, and insulated the national utility from legal or political hurdles. The initial Mesmer plan was to build 80 reactors by 1985 and 170 by 2000. That was insanely ambitious. However, what they did achieve was still very impressive, from almost zero nuclear power in the early 70s to 50 reactors generating more than 40% of the country's total energy supply by 1990. Between 1978, when the first new French nuclear reactor came online under the Mesmer plan and began commercial operation, and 1990, the world added almost 16 exajoules of nuclear energy supply, and France alone accounted for more than 3.23 of those exajoules, about 20% of the world total. That's almost as much as the 3.74 exajoules of nuclear energy the US added over the same time frame, despite the fact that in 1977, the US economy was some 5 times larger than that of France. Look at this. This chart shows nuclear's share of total energy supply in France from 1974 all the way up until last year, 2025. As you can see, from next to nothing in the mid-70s, nuclear rose to account for more than 40% of France's energy pie by 1990, and today it's over 47%, nearly half of total French energy supply for all uses. Similarly, of course, solar has benefited from government largesse worldwide in recent years. It's been heavily subsidized and encouraged via mandates in several US states. Europe, and as I'll outline in more depth here in a moment, China, the world leader in solar growth in recent years. Much like solar today, there was plenty of talk back in the 60s and 70s about how nuclear would take over the global energy system. In the early 70s, the U.S. Atomic Energy Commission confidently projected that the U.S. alone would have 1,000 operational nuclear reactors by the year 2000. Now, the U.S. actually peaked at around 112 operating reactors. Worldwide, the International Atomic Energy Agency, the IAEA, predicted in its 1973-1974 annual reports that global nuclear capacity would eventually hit between 3,600 and 5,000 gigawatts by 2000. For context, global nuclear capacity today sits at roughly 376 gigawatts. That's less than 10% of what was anticipated. Civil engineers envisioned nuclear-powered cargo ships, tankers, and commercial vessels, entirely replacing oil-burning marine engines. There were serious industrial programs aimed at building high-temperature, gas-cooled reactors to plug directly into steel mills and chemical plants to replace coking coal and oil. That didn't happen. While nuclear did grow into a very significant power source globally, and I believe nuclear will ultimately play a bigger role in the global energy system, it never replaced oil, it never replaced natural gas and coal. Nuclear's share of global total energy supply actually peaked at about 7.5% back in 2001. So what happened to curtail nuclear's growth over those years? Well, nuclear power required a massive upfront capital commitment, building the reactors, followed by decades of useful life and low fuel costs. That initial upfront investment cost is dependent on factors such as the cost of capital, prevailing interest rates, and the regulatory and political framework, the red tape, to siting and building a new reactor. High interest rates in the late 70s and early 80s slowed development. Moreover, after the 1979 Three Mile Island incident, the U.S. Nuclear Regulatory Commission, the NRC, overhauled safety standards, mandating massive design retrofits, introducing strict operating procedures, and creating an incredibly burdensome regulatory environment. Then, in 1986, the Chernobyl meltdown in what is northern Ukraine today, but what was then part of the Soviet Union, of course, well, that clipped nuclear's growth in Europe particularly. Just 1 year after Chernobyl, in 1987, Italy held a national referendum. Voters overwhelmingly rejected nuclear power, leading the government to completely shut down its active reactors and cancel all ongoing projects. The disaster catalyzed German anti-nuclear movement and laid the political groundwork for what would eventually become known as Energiewende, which is Germany's energy transition policy. It permanently shifted state funding in Germany away from nuclear research and development and redirected subsidies toward wind and early solar projects. In the United Kingdom and Western Europe largely, licensing new designs became a political minefield. Public opposition forced governments to implement stringent local environmental reviews, and the massive state-backed subsidies required to underwrite these mega projects were quietly pulled back as political liabilities. I believe that solar today is experiencing its own Chernobyl moment. Look at this chart again. From 1965 to 1975, nuclear's growth trajectory was very similar to solar's over the past 10 years. And nuclear continued to grow after 1975, much as I suspect solar will continue to grow in coming years. However, there was no transition away from oil, gas, and coal in the 70s, 80s, and 90s. Similarly, there will be no complete transition from the big three to solar or other renewables today. You see, one of the major advantages of nuclear is that it is reliable baseload power. Integrating it with the existing electrical grid is really pretty simple. It's essentially a drop-in replacement for coal or gas or oil-fired power. The problem that ultimately limited nuclear's growth are those big upfront capital costs, and then the increasing regulatory burdens imposed in the US after 3 Mile Island and in Europe after Chernobyl. Solar has a different set of problems. In many ways, you could say it's the opposite problem. You see, the upfront capital cost to build and install solar energy generation capacity, it doesn't represent the real cost of solar. That's only the tip of the iceberg. The real problem is that solar and wind are intermittent. These are not dispatchable baseload power sources like, for example, natural gas or coal. So the real struggle, the real overlooked cost, is the cost of integrating larger solar generation shares into the existing electrical grid without destabilizing the system. Now, as I outlined in last week's Sunday Deep Dive, we're already seeing this issue play out in New York, prompting a grid emergency due to the recent heat wave. You see, the plan in New York was to retire aging oil and gas-fired generation capacity and replace it with zero-emissions renewables. Unfortunately, New York closed down its valuable baseload energy generation, like the Indian Point nuclear plant, before it had a viable alternative. While renewables have added capacity on the margin, their intermittent generation profiles have forced NYISO, which is of course the manager of New York's grid, to force several dirty peaker plants to remain in operation just to keep the lights on. Last week I also explained how in Europe, aggressive expansion and subsidies for renewables have driven up electric rates to the highest of any major economic region of the world. And a major blackout in Spain and Portugal was directly caused by solar's intermittent generation profile and the lack of sufficient operating gas-fired capacity to balance the grid. However, the real story here is China. As I explained earlier, solar was the single largest source of growth in global primary energy consumption in 2025, accounting for 28.5% of the total, followed by gas at 24.2%. And China alone accounted for 51.7% of the total growth in global energy supply from solar last year. To put that in context, the US and European Union accounted for only 13.4% and 9.9% of total growth in global solar energy supply in 2025, respectively. All of Asia except China accounted for just 11.2% of solar's global growth in 2025. More than 41% of all exajoules of solar energy generated worldwide in 2025 were produced in China, with the US a distant number 2 at 14%. So look at this chart. This chart shows the pace of Chinese solar generation capacity additions by year. It's based on monthly data sourced from the Chinese government via Ember. So, for example, in 2022, that's the dark blue line on this chart, China added 86.07 gigawatts of new solar capacity through the course of the year. In 2023, that's the orange line, it was 216.9 gigawatts. And in 2025, last year, China added a staggering 315.07 gigawatts of new nuclear generating capacity through the course of the year. Now, look at that 2025 line on my chart carefully. That's the light blue line there. Do you see how there was a big surge in solar capacity additions from March through May of 2025, last year? Between the end of February and the end of May, over just 3 months, right? China alone added a staggering 158.23 gigawatts of solar capacity. Also notice how this springtime surge is only a feature of the 2025 line, not prior years, right? In those other years, it was a more gentle rise over the course of the year, maybe with a bump up right at year end. Now for 2026, we only have data through April so far. This is the purple line on my chart. However, as of April, the pace of new Chinese solar power capacity additions was lagging behind what we've seen in each of the past 3 years, not just 2025, but also 2023 and 2024. There is a very real explanation for that springtime surge in solar power building last year in 2025 and the collapse in solar construction year to date in 2026. You see, in early February of 2025, the Chinese government outlined a change in the tariff structure for new solar and wind power projects that took effect on June 1st of 2025, right? So China's prior policy was a feed-in tariff structure. Grid companies were legally required to purchase 100% of a solar project's generated electricity at a fixed, predictable price. Now that price was usually pegged to the local coal-fired power benchmark. So, solar project developers faced zero volume risk because all their power was purchased, and zero price risk because it was a guaranteed fixed rate. China's new solar policy is similar to what's known in the West as a contract for difference, or a CFD system. Solar projects must sell the electricity they produce directly into competitive wholesale spot power markets, not via some fixed rate. However, particularly in regions with heavy solar generation, wholesale power prices tend to collapse in the middle of the day when solar output is at its highest. So, to prevent a complete collapse of the economics of the solar industry, the government underwrites a two-way strike price mechanism. So different provinces in China have different underwriting coverage, but it's typically somewhere in the 40% to 85% range. So any remaining uncovered generation beyond that must be sold at competitive spot prices. But for that covered amount, so 40 to 85% depending, there is an established auctioned strike price. It's developed via an auction process. If the spot price of power drops below that strike price, the government pays the developer the difference. However, there's a second catch. If the market spikes above that auction price, right, the developer is required to pay back that excess into the system. In short, under the old system, solar developers were essentially guaranteed a return for building out new solar capacity, laying down panels. Whereas the new system requires more careful planning around actual economics. Solar developers have to consider local grid congestion, market supply, and demand for power before siting and developing new plants. That big surge in capacity additions in the February through May timeframe last year simply represents a mad rush to get projects completed under the old, lower risk and more profitable feed-in tariff system before the government's June 1st, 2025 deadline. So why did China make this change? Well, the most proximate reason is that China's generous feed-in tariff system was only one piece of the puzzle. The Chinese state also subsidized solar at every level, from quartz mining to polysilicon refining, and solar power panel and module manufacturing. This led to a massive overcapacity of solar module production and plunging solar panel prices. And since solar panels and modules are a huge portion of the upfront cost of new solar generation projects, that further encouraged and fed the development of solar projects to take advantage of the feed-in tariff structure. In the end, the Central Renewable Energy Fund that was used to finance China's feed-in tariff payments simply couldn't keep pace with all this new project construction. While this fund was financed using a surcharge on electricity rates, it accumulated a significant deficit, forcing the central government to step in. However, the bigger problem here is that grid congestion and the same underlying issue that plagues solar and wind everywhere: the intermittency of power generation. For solar, the problem is that these projects generate massive amounts of power in the middle of the day. And in China, as you can see on this map, many of the biggest solar projects are built in the western and northern parts of the country. These are remote and sparsely populated regions like Tibet, which has less than 4 million people living there, and is located over 1,500 miles from East Coast population centers. The transmission lines needed to move all that power east, well, they're simply maxed out. We can actually see this growing problem on this chart. Now, this chart shows China's solar capacity factors by month since December 2016, and it is based on data from the Chinese government via Ember again. The capacity factor, well, it's basically calculated by computing the actual amount of power produced from China's solar projects nationally, divided by the maximum theoretical output based on the installed capacity of solar panels. Of course, you can see the seasonal variation in the blue line. Solar produces more power as a percentage of capacity in the summer due to factors like longer day length, the weather. However, since the summer of 2022, there's a clear pattern of lower highs and lower lows. So the seasonal peaks and lulls in solar capacity factors are falling. Now the capacity factor overall has been drifting lower. To make this trend clearer, I've overlaid a 12-month, that's a full year obviously, moving average as an orange line. This kind of helps smooth out those seasonal peaks and lulls. As you can see, that is down more than 2 full percentage points from highs over 14% back in 2022 to around 12% today. A major reason for that is increased curtailments. Essentially, curtailments means that the inverters, which convert the raw direct current electricity, DC power from the solar panels into alternating current AC power used by the grid, they actually throttle back the amount of power they convert and export to the grid. Recent reports suggest that in Tibet, solar curtailments have exceeded 30% at times in recent months. Since solar curtailments result in less power generated, it directly pushes down solar capacity factors, which are pictured here. So the shift in China's solar policy from a feed-in tariff to a contract for difference mechanism was also an effort to slow solar development because the grid is already struggling to accommodate the massive influx of intermittent generation they've already built. You see, solar's flaw is that it cannibalizes itself. The more solar capacity you add, the bigger the oversupply of power in the middle of the day, the greater the decline in power prices, and the less profitable new projects become without ruinously expensive subsidies. The Chinese government recently released specific sector targets as part of its 15th five-year plan in late June this year. Under the new targets, the government implies a decline to just 135 gigawatts of new solar capacity power per year through 2030, less than half the 315 gigawatts installed in 2025, and significantly below the 2023 and 2024 pace of sort of 217 to 277 gigawatts. Meanwhile, the State Grid Corporation of China, responsible for about 80% of the country's power distribution, formally announced a plan to spend 4 trillion won, that's about 574 billion US dollars, on fixed asset investments over the next 5 years. That's a 40% increase in capital expenditure from the 14th five-year plan, which covered the period from 2021 through 2025. The government also has announced a series of new regulations aimed at culling the country's massive solar panel and module manufacturing industries. Indeed, industry estimates are that around 30% of China's existing solar manufacturing capacity will be legally disqualified from production or unviable economically when the new rules hit on January 1st of 2027, next year. The message is clear. Solar's tremendous growth is going to slow in China, and by extension, it's likely to slow elsewhere as well. After all, a massive domestic overcapacity of solar panels and modules in China encouraged significant exports of cheap Chinese solar panels to Europe and the US. More recently, Africa has become a major destination for this equipment as tariffs and other trade restrictions slow exports to the US and Europe. That in turn encouraged growth in solar capacity outside China, solar generation capacity specifically. They hooked Europe and some US states on supposedly cheap solar, and those countries and states are now dealing with the hangover of that. The necessary massive grid expenditures just to integrate intermittent solar and maintain grid stability. So there you have it. The energy transition is neither as dramatic or as rapid as some would have you believe, and the world will continue to need more oil natural gas, and yes, coal in coming years. In my view, solar and other renewables will follow the path that nuclear followed some 30 plus years ago. Very strong growth initially, but the early talk of the technology displacing other energy forms will founder. That's solar's Chernobyl moment. Thanks for listening. I hope you enjoyed this week's Sunday Deep Dive. If you did enjoy this video, please drop me a like or a comment. Really helps out with the algorithms. And you can also subscribe for free to make sure you receive this weekly video and my other posts and updates when they're released. And if you'd like to give the paid tier of Free Market Speculator, including our popular Energy Bulletin Top 10 model portfolio, a try, I am offering 14-day, 2-week free trials via the link below. I'll see you next week for another episode of my Sunday Deep Dive.